TDS, or tax deducted at source, is a mechanism for collecting income tax in India at the source from where an individual's income is generated. Entities making specified payments are required to deduct tax at source and deposit it with the government. In simple terms, TDS is a way to ensure that the government receives tax revenue in a timely manner. It helps in preventing tax evasion and promotes transparency in financial transactions. TDS is applicable to various types of payments such as salaries, interest, rent, commission, etc. The person or entity making the payment is responsible for deducting the applicable tax amount and depositing it with the government. The rate of TDS varies depending on the nature of the payment and the income slab of the recipient. It is important for individuals to be aware of the TDS provisions and comply with the necessary requirements. Failure to deduct or deposit TDS can result in penalties and legal consequences. It is therefore crucial for both the payer and the payee to understand and fulfill their TDS obligations. In conclusion, TDS plays a vital role in the Indian tax system by ensuring the timely collection of income tax. It helps in maintaining the financial integrity of the country and promotes a fair and transparent tax regime. Section 192 applies to employers making salary payments. TDS is deducted on income under the head Salaries. Section 194A is applicable to interest payments, excluding interest on securities. TDS is deducted on interest exceeding specified thresholds. Section 194C applies to payments made to contractors or subcontractors for work contracts. TDS is deducted at specified rates. Section 194I pertains to TDS on rental payments for land, building, or furniture. TDS is deducted when rent exceeds specified limits. Section 194J is applicable to payments for professional or technical services. TDS is deducted at specified rates. Section 194H applies to payments made for commission or brokerage. TDS is deducted when the payment exceeds specified limits. Section 194P applies to individuals or HUFs making certain payments. TDS is deducted when the aggregate amount exceeds specified thresholds. These are just a few sections, and there are more sections under the Income Tax Act governing TDS on various types of income payments. Each section has its own criteria, rates, and rules for TDS deduction. It's crucial for deductors to be aware of these provisions and comply with TDS requirements to avoid penalties.